When you wake up in the morning and you hear all the headlines from D.C., what do you think?
I think it's hard to keep track, but I do think it's a lot of noise that we're hearing now versus the asset allocation themes that we're putting in the portfolio. So you mentioned the dollar. The dollar was a very crowded trade, the long dollar trade coming into 2017. Kind of linked to the Trump trade, right, along with things like long small cap stocks or higher interest rates. Small cap stocks are underperforming large cap. Interest rates are lower. Dollar is weaker this year. Our overweight to the U.S. was not based on the Trump trade. It was based on a pretty resilient economy. This economy, this GDP growth, although we're not getting the 3% like some people want, is still okay. And guess what? Earnings season in Q1 and what's shaping up in Q2 looks pretty solid.
But what we are seeing is revisions downward for earnings in the fourth quarter and the first half of 2018. Plus, you have Fed Stanley Fischer saying yesterday in Brazil, uncertainty about the outlook for government policy and healthcare, regulation, taxes, and trade can cause firms to delay projects until the policy environment clarifies. That's where you're going to get the intersection when you had business confidence so high. What's your expectation?
Well, the market continues to move higher. Financial conditions are important, Alex. So, I mentioned the dollar being weaker, interest rates being lower. Credit spreads are very cooperative right now, and equity prices, as I mentioned, continue to move higher. This is a market where tail risks, compared to last year when we had U.S. election, Brexit, French election, even in the spring of this year, tail risks are just getting smaller. And there's still so much cash on the sideline, right? So for us, the pain trade is the melt up in equity prices, not down, because of how much is still uninvested. So I guess is what I'm trying to say. The wall of worry continues to be climbed. I mean, you have the headlines from yesterday, and you have the market having another high. This trade is poised to move higher based on the fundamental story that we're seeing.
Phil, you put your finger on it. At the same time that the markets keep going up and up and up, you have a lot of cash on the sidelines. Not just personal cash, investors' cash, but also corporate cash, because they're not investing. So that must indicate that people are worried about something.
Yeah, you know what? I think 2008 especially was such a traumatic event for individuals. We talk a lot about that, the return of principal, not the return on principal. Companies have to take a leap of faith. And the leap of faith that companies have to take have not necessarily been taken. And that's where kind of this velocity of money story hasn't come through. Inflation is still pretty tame. But you know what? This is still an ideal environment to take risk.